So good afternoon. I've selected for you 5 key events which happened during the last 12 months in the digital world. I'm sorry, but they will be a little bit biased by my background as a former central banker. So the first date I have selected for you is October 2020. The Central Bank of the Bahamas has issued the cent dollars, the first CBDC ever. I think this is important because CBDC is no longer a concept. It is now a reality in a small country, of course, but nevertheless a reality, and it is something which is very important for the history of money. Second event that I have selected for you is in December 2020, the Libra has become the Diem. I mean, the change of name has no importance. It's not what matters. What matters is that progressively the Libra has abandoned its ambition to become a global currency. They will now focus on stable coins linked to single currencies, and therefore they will be under the clear supervision of one central bank for each of their DMs. This is completely different from the situation where they would have issued a multi-currency Libra, issued based on several multi-currency basket, which would have been very difficult to regulate for central banks. So Libra becoming Diem means, in fact, the central bank taking control about the Diem. The third event I have selected for you is the CBDC again, but from China this time, from a small country in Bahamas now back to the bigger country in the world. We are not yet in production. It's still in the trialing phase, but trialing phase involves already 25 billion wallets. So the bigger country in the world is going to move to CBDC very, very soon. This is clear from the white paper of the Bank of China, the People's Bank of China. The fourth event I have selected for you is again CBDC, but this time the ECB launches this digital euro project. They are very clear that no final decision is taken, but the ball is rolling. And as a former ECB employee, I know very well that when ECB launches a project, there is a good likelihood that the project will mature. And therefore, this is another proof that the CBDC is moving ahead. And finally, last slide about a speech I read recently of John Cunliffe, the speech he delivered at Cybos, the virtual Cybos. And he said at this point, crypto assets represent $2.3 trillion, and 95% of them are unbacked. And that means, and he insisted, in fact, that they have no intrinsic value. And although he was relatively optimistic about the impact on financial stability, I would nevertheless wonder whether the fact that we are facing assets with no intrinsic value does not mean that we are in front of a giant Ponzi scheme. Thank you very much.
Very much for the introduction. Yeah, I'm glad to have the opportunity to share a couple of remarkable events and developments over the past year that have come across my way. And the first I'd like to highlight is that in Europe, the account-to-account instant payments have really become the new normal in several countries already, and are quickly doing the same in other countries. And especially there is still a big gap outside the Eurozone. Instant transfers are outpacing the traditional credit transfers. Countries like the UK, Denmark, and Sweden, more than half of the credit transfers are instant. Within the Eurozone, however, they're catching up. They started later from 2017, whereas the other countries started already 2012, 2013. And there are now some clear leaders emerging, the Netherlands, Spain as well, Slovenia, small country, but making big steps. Whereas the larger countries like France and Germany are still a bit lagging, but expected to pick up. And the picking up is also pushed, spurred on, you could say, by the regulatory authorities, both the European Commission and the ECB. The ECB has mandated to make interoperability possible through the TIPS system, which has gone live 2 years ago. And at this moment, all the banks that are using SCT Inst are forced effectively to join that system so that they can all exchange payments between them. And also there is still up in the air, but expected before the end of the year, perhaps regulatory intervention coming from the European Commission. So this trend is here to stay. The second remarkable event is what I call Facebook's about face. There was a lot of turmoil in the market about the Libra project, the stablecoin that Facebook announced back in 2019. 2020, there was a reversed version after the first regulatory pushback, and then effectively it got shelved. The retreat was back to the US. It wasn't called Libra anymore, but it's called Diem, and it's to be launched in the US only for US dollar. So what you can say, and this is quite interesting to see, is that like it was almost like a first big event started by a non-bank, Facebook, with trying to become regulated and trying to, as they say, have a constructive dialogue with all the regulators worldwide. But effectively, the effect, as far as I can see, has been that the regulators mainly have become annoyed or even antagonized. Yet I think there is still the innovative potential, but the tone of voice and the approach that Facebook took has not gone down well. So the question is, will next year see Facebook regain strength? Wait and see. One thing that has come out, and that's also interesting, is recently in October, so this month, the BIS issued a paper saying that stablecoins should be subject to the same oversight as other financial market infrastructures. That gives an opening because there are many financial market infrastructures who know how to deal with their oversight regimes, who could now look at stablecoins, including Facebook's. Really triggered by the announcement of Facebook of the Libra earlier on, is that central banks have jumped on digital currencies. The CBDC is top of mind. We've seen live implementations already last year in China, in the Bahamas with the sand dollar, and in Cambodia. And in many other countries, there is accelerated development, proof of concept, and say preparations for going live, even if the decision hasn't been taken yet. Yet also, and notably in the US, doubts remain as to what problem exactly is being solved. And the Federal Reserve Vice Governor Waller gave a quite skeptical speech in August, worth looking at, if you have the time to look it up. A fourth interesting thing is that money is flowing into payment fintechs really big time. The funds that are going there through increases, there are big increases in the number, in the size of funding rounds. What is interesting to note is that it seems to be largely the scale-ups, the companies that have been around but hadn't grown yet very fast, had grown organically, that they are taking a growth sprint, like Stripe, Square, and Klarna, and also the mature payment giants that we've seen around for 5, 10, 15 years, or MasterCard even 60 years. And what we see is that those giants, witnessed by the CFTE market cap tables, which Hui is maintaining, they continue to gain market value. And it seems to be the case that they're just starting to benefit really big time from the fact that they're there and they are established and they're trusted. Now, a quick look to finish off this 5 minutes to the crystal ball for 2022. Basically, on these trends that I've mentioned, I think they'll continue. The acceleration of instant payment, those will go also to include cross-border and cross-currency connections. There is the debate on why CBDC, which will continue, but it will be in parallel with concrete developments. So I think there will be some big debates, but the steamroller will continue to roll. Another thing probably is to see that we'll see even more artificial intelligence, machine learning coming to the rescue, where in fact the risk is raised when payments are being made instant, fraud risk, cybercrime risk, but these new technologies, AI, ML, and also functionalities like confirmation of payee, request to pay, are supporting this. And a final prediction that I personally make is I think the Bitcoin economy of El Salvador is a big mistake, and I think it will crash before the end of the year. So thank you for giving the opportunity of sharing a couple of thoughts. Thank you for watching, and I hope to see you around in payment space soon. And with this, back to CFTE. Thank you.
My name is Grace Chong, and I'm a payment specialist from Simmons & Simmons. So in February 2021, we started off the year with the continuation of COVID COVID-19. And JP Morgan noted then that Bitcoin can be considered as an economic sideshow, and fintech innovation is a story that will dominate financial services, and specifically the increased demand for digital services, the rise for online startups, and expansion of digital payments. Well, I tend to think of crypto as the new paradigm, and we're ending off this year with crypto payments making a splash on the world stage, which is why it makes a splash also on one of my key themes today. So I have been a payment specialist for many years, but it was only the last 2 years that we saw BNPL, short for Buy Now, Pay Later, really gaining momentum again amongst the millennials and Gen Z. We have seen a wave of commercial partnerships. So, for example, Standard Chartered's 10-year US $500 million partnership with Singapore-based Atomi, a great example of a banking-as-a-service play where BNPL providers are seeking to leverage on strategic partners to create more revenue models and improve their risk models. Regulators in various other countries, such as Singapore, US, Australia, and New Zealand, are also considering responsible lending laws. And in the meantime, BNPL is still projected to grow 58% in the next 5 years, according to a report by IDC. So definitely a trend to watch. This is, after all, against the backdrop of an increased focus on e-payments, and the e-commerce industry is expected to expand by 5.5% by the end of 2021. And card payments, we saw, are becoming the preferred means of transacting, especially in the time of COVID-19. And there has been a significant increase, 91% to be exact, to contactless payments in time during COVID-19. And in Singapore, you have seen that basically, it is one of the most integrated nations, with 66% of consumers developing contactless habits. And definitely the use of QR code scans is also increasing, and there's increased use of and potential for this for purposes like the ordering of food, unlocking of city bikes, and other purposes in different countries in Southeast Asia. So definitely we'll continue to see this as a trend on the world stage, which now brings us to digital assets payments, one of my favorite topics. So as Shamav P, the founder of AOL IM, said, digital assets payments, it is money 2.0, and it is a huge deal. And debit prepaid card payments are really taking off in the market, with crypto card players getting licenses or applying for licenses such as Crypto.com, YX, and tie-ups such as Grab and AAA, enabling crypto trading services in countries like Singapore and different jurisdictions, Indonesia, Korea, and other countries. MasterCard has also announced that merchants on its payments networks will soon be able to integrate crypto into their products by partnering with Bakkt to expand the ways users can use crypto. Which brings us to the next trend, which is financial products and the launch of the super app, which has been happening for a while. I'm sure everyone is familiar with WeChat, but definitely we have seen the trend moving towards the bundling of financial services through payments on payments apps. So basically the offering of remittance services, insurance, and other loan products such as Korea's Kakao Pay, Indonesia's Gojek and Tokopedia, and India's Paytm. And with the rise of interest in ESG, there has also been increased focus on ESG products, and perhaps we'll start to see more such products also being offered on payments apps. There are often a lot of players are also looking towards whether they are able to open product lines on their apps and whether they're able to combine or offer more big tech services such as Amazon. But it is often a difficult game to play, as users are often difficult to capture in increasingly saturated markets. So lastly, I think we cannot end off without a quick note on Partior, which is which saw its first pilot recently in October. And this is the blockchain payment platform launched by JP Morgan, DBS, and Temasek. The enterprise blockchain platform aims to improve the speed and reduce the cost of cross-border payments. They are expected to reach 156 trillion in 2022. It will start by focusing on Singapore dollar and US dollar currencies, and the open network grew out of the Monetary Authorities of Singapore's Project Ubin, which started as an exploration of central bank digital currency or CBDCs. And Patio's wholesale clearing and settlement system can enable settlement in less than 2 minutes, improve transparency, and reduce the need for intermediaries, which removes transaction costs. So definitely one to watch as they expand on the global stage. So with that, this ends my 5 by 5 by 5. Thank you, CFTE.
Hello, my name is Fabian van den Reet. In the next 5 minutes, I'm going to give you a bit of my personal thoughts about how the payment industry behaved this year and what's up for next year. I think this year is, of course, the year of the central bank digital currency. Every central bank we know is working on that. It's a big debate, public versus private money and commercial bank versus central bank money. Who will have access to CBDC? Only firms or you and me is still up for grab. Also discussion about what is a stable coin, what is an unstable coin, as we've heard. And also as a capital markets expert, I'm very curious to see the impact that CBDC will have on settlement of equities and bonds, for instance. Another aspect, talking about digital assets, I know it's not payments, but to me, this year was really the year where people realized that tokenization of existing securities and new digital assets will go institutional. And again, the impact on the payments industry of the settlement process. Are we going to settle against payment, or are we going to settle bonds against other type of securities? Is also an interesting debate. As far as payments provider is concerned, if I look at the incumbent payment rails provider, it's clear that they are going into a collision course, whether you are a credit card rails or a correspondent banking rails. At the end of the day, because of the move to domestic instant payment and cross-border instant, those infrastructure will kind of overlap more and more. Even though the needs of the user is being fragmented, there's more and more vertical payment solution. We see potential overlaps of providers, and this year was also a big push towards providing SMEs with better cross-border payment solution. Now, payments is also producing a lot of payments data, and in itself, the value of the data might be bigger than the value of the transaction. What we see as well is that you need more and more data for coming up with the right customer insight, and especially to fight financial crime. And even though that solutions are getting more and more sophisticated, payment fraud is on the rise. It's increasing, not decreasing. With a move towards real time and instant, this analytics and detection will become even more difficult. And there will be a need also for cross-ecosystem, cross-rails analytics, because today analytics are very, very much bound to the network, whether it's a credit card or a correspondent banking. Tomorrow and today we'll need solutions which are cross-rails. To finish off, we've seen very active regulators this year. I think next year will be even more of that, not only coming up with new regulation, but also being very innovative. And when you see what several regulators, whether it's CBDC or what the BIS is doing, clearly innovation and regulation is far more intertwined than it used to be. You have regulators as innovators, and you have some of the innovators saying, I don't need regulation, I'll self-regulate myself. So, which is the case, for instance, in some DeFi initiative. So how will this unfold? Well, we'll know that next year. Thank you.
I love the idea of 5 minutes, 5 slides. And here I'm going to talk about the payments and the fintech. My name is Vitesh Jain, and I'm a co-founder at Infinite and a member of G20 GPFI, which is Global Program for Financial Inclusion. So the first thing that I would like to talk about in payments, as well as like everybody's quite excited throughout this year and the last year, and I'm pretty sure going forward as well, is buy now, pay later. Why now, pay later? Because it removes the friction from the customer journeys. And if you look into the net promoter score of buy now, pay later in comparison to the other payment methods, and definitely it tops it all. So everybody is getting excited with the festivities and the festive season for the shopping. And not only the retail companies, but the payment companies are gearing up for that. Why? Because that's where the money is. But is it really helping out the consumers, or is it helping out themselves? That's something to watch out for, because there's no strict regulation around it. And we are quite conscious in terms of how it is going to work out in terms of the debt over the period of time. So this is something to watch out for. But for now, yes, we all in it for buy now, pay later, marry now, pay later, shop now, pay later, or do anything where you have to make payment, you can do it later. And that's what on the offer now. The other thing that I'm quite excited and I've seen the significant adoption in the market is the cryptocurrencies. Yes, it's a payment method, but at the same time, it is not just the payment method today. The people are excited about the cryptocurrencies from the future of payments perspective, but at the same time, it is providing an immense opportunity for people for investments. It's not only for the retail investors, but for the corporates as well. MicroStrategy, everybody knows about it. They've invested significant amount of money in the Bitcoin. And that's why we are seeing quite a lot of movement into the cryptocurrencies. And not only that, from the investment perspective as well, we have seen a huge surge in investment from the VC landscape into cryptocurrencies, the startups. And that has led to the highest number of unicorns in this year. So yes, the cryptocurrencies, is it a FOMO? Yes, a kind of. Everybody is rushing towards it, but it will stabilize over the period of time. And we will see more stable payment method through cryptocurrency over the period of time. Contactless. Yes, we have been talking about it for a decade. We have seen a huge surge in the contactless payments. And the overall contactless payment is growing exponentially. It is dominating the all payment methods across. Just in the 2021, the contactless payment have grown up by 45%. Yes, it is all due to pandemic as well. But whether this will continue over the period of time, yes, it will. But are we going cashless society? No, I would like to say that we are going to be less cash society rather than the cashless society over the period of time. Because the adoption of the cash is still there. And that is going to be there because we've got a huge population to serve. And unfortunately, a significant number is still unbanked. So yes, the adoption is going to continue, but we are not going to get rid of cash anytime sooner. Investment. That is one of the most interesting and favorite topic for all. We have seen a huge investment across the fintech landscape, and that is led by few of the sectors, specifically the cryptocurrencies as well as the payments. I wish I had a crystal ball, but I said this in early 2020 that the pandemic could lead to the birth of new fintech unicorns. And guess what? In Q3 2021, we have seen 42 new unicorns. And the investments in the fintech is all-time high. It is double than the last year's investments. So it is not stopping. It has continued to grow. And yes, everything evolves and revolves around payments. Now, the question is, what is going to happen later on? As I said, I don't have a crystal ball, but what I can see, everything revolves around payments. We are going to see a further innovation in the payments landscape, which is going to lead and support the open banking and further the open finance landscape. So the organization, financial services, fintechs are looking at the future to serve overall financial well-being of a customer. And that's where the focus is. So if you see, everything is around the payment landscape, whether it's your insurance, asset, wealth management, telco, mortgages, everything is going to be under single umbrella over the period of time. And what is enabling all of that? Is the payment transaction, is your authorization, acceptance, and the data. So yes, this is something to watch out for. Yes, it is at a high level, the open finance. Open banking is just the stepping stone, but the future is open finance. And that is going to be enabled by the payment methods and the payment rails. And that is the fundament.